Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond at the Contrarian Trader, and it is June the 9th, a beautiful day. I'm out on my deck, so if you hear birds in the background, my apologies. So what we're going to do today is we're going to talk about how our week was first, then we're going to segue over and into our watch stocks for the coming week. So let's begin with our core positions. We are building core positions in NUGT and in USLV. We have been for a while now. Now, NUGT last week, it shot up 17.39%. We closed just off the highs of the week last week, so we are deep in the money on this one. So a very nice trade. But I will caveat what I'm saying about NUGT with this, and that is that while I am longer term extremely bullish on gold, silver, the gold miners, I think that in the short term, we are going to get a pullback. And if you're thinking about buying these names, you're too late. You need to wait for the pullback. It's coming, I guarantee you. Because when you take a look at a daily chart of NUGT, you're seeing a lot of topping action. We have been extended on NUGT for the past several days. In fact, we opened up a hedge using DUST, which puts you short of the gold miners, twice last week. We'll talk about that in a moment. We booked profits on both of those hedges. But first, you could see that we started seeing topping action here on the 5th as we were leaning into the third standard deviation Bollinger Band. And history has shown us, because I've been trading NUGT for years now, when you see NUGT leaning up and into the third standard deviation Bollinger Band, you're going to get a pullback. And on Friday, when we surged higher on news that was very bullish for gold, and that news was that you had jobs data, which came out very, very poor. The dollar plunged, and initially stocks plunged too. However, you need to remember that the Wall Street traders out there are junkies. They are addicted to easy money, low interest rates, quantitative easing, and it is coming back and coming back with a vengeance. So they bid stocks up off the lows of the session, and you saw a rotation out of the gold miners and into your more attractive stocks, which are Google, Amazon, Netflix, the FANG names. Now, with our hedge using DUST, we did so twice last week. The second time around, right before we executed that trade, I discussed strategy with members on Market Wrap, and here's what I had to say. And that leads us into our conversation with regard to the NUGT and how we plan on playing that. Notice I did not open up a hedge into the close today. The reason is I think they're going to gap it open tomorrow, and we'll look to short. We'll look to hedge the NUGT position using the DUST. We'll talk about that in a moment. Let's just get through the indexes. NUGT. All right, so NUGT did pull back today. We expected that. We hedged. We booked those profits really quick on the hedge because the path of least resistance for DUST was definitely to the downside. And for NUGT, while certainly extended here, and it remains extended, not as extended, but certainly still extended, the path of least resistance remains up. We don't want to fight it. Now, I do believe that we'll probably get another surge higher tomorrow. Now, let's go over to TrendSpider for a moment. Now, going into the close, I was actually eyeballing reopening a new position on DUST. But at a bare minimum, I wanted it to come down here to 1652. It didn't happen. And this bar here, this daily bar, is a bearish key reversal. So in all probability, we're going lower. And what has me a bit concerned is that if this fails, we could come all the way down here to a 14 handle, high 14s. And that's weekly support, as noted by this dashed line. So sometimes the best thing to do is nothing, and that was the decision I made today. So I don't regret it. If we pull back tomorrow and we see a reversal day on NUGT and DUST, then we may step into buy some DUST to hedge that position yet again. Now, turning to NUGT, where we would want to get more aggressive to the long side. Before we talk about getting aggressive to the long side, let's first talk about price targets here. I think we're coming here. Around 1953, we closed at 1925. Not too much further to go. And you could see that this has been resistance before, back here and back here. And the price target I'm looking at is a pullback here to, say, $17 for an extreme pullback. Say $16.50 at current. This is descending, so that'll change. And as I mentioned last night, I don't think we're going to fill this gap here, but you never know, right? So we'll keep an open mind. So remember, if we do surge up higher tomorrow on NUGT, we'll probably open up a hedge on the DUST. So as you can see, they gapped the shares up higher as I predicted on Market Wrap the next morning. But what we did is we opened up a hedge. The initial hedge was 20% on the first trade. The second hedge was far more aggressive. About 40% of our NUGT position was hedged. Our first hedge, which we opened up on the 3rd here and closed out on the 4th, we booked a 45-cent per share profit, or 2.6%. The second hedge, which we opened up in the pre-market on the 5th, as they were pounding dust lower and surging NUGT higher, we opened up our hedge again at 40% of our total position of NUGT. We booked a profit of $1.14 per share, or 7% on that trade. So we were able to, despite the fact that we were seeing NUGT become more and more extended, we're able to build a cash position to act as a buffer in anticipation of a pullback. And I do believe that we are going to get that pullback very, very soon. But folks, I will be backing up the truck and accumulating a very large position in NUGT. And I'm already carrying a large position already. It's going to get bigger. And you may be saying to yourself, why? Well, why are you so aggressive to the long side with gold and the gold miners? And nobody else on Wall Street has been talking about it. It's because they're sheep. I have been talking about the chart of the tips for months. And anybody who's willing to spend the time and overlay gold versus the tips, especially during the 2004 to 2012 time period, you would see that the tips, Treasury inflation protected securities, trade in tandem with gold. The tips last quarter, Q1 of, this is a quarterly chart, Q1 of 2019, broke out of a multi-year base. And we are putting in all-time highs on the tips. But we're being told by the government there is no inflation. But that's not what the bond market is telling us. We take our clues from the charts, not from Wall Street, not from the financial news media. We look for divergences. We are looking for signals by the market, which will tell us that all is not well with this economy. You saw a horrible jobs data last week for the prior month. The prior 2 months worth of jobs data were revised lower as well. So what we're doing is we're seeing a trend of declining job growth. Yet we're being told there's no inflation, the economy's great. So for all intents and purposes, folks, we are all being sold a bill of goods. The question is, do you buy? Or do you look at the charts? Let's take a look at USLV and how we did last week there. USLV on a weekly basis last week, we were up over 9 1/3% on the week alone. And we broke out above this upper band of resistance. You may be saying, Bob, did you buy more? No way. Why? Same reason. Let's go to a daily chart. The same reason why I didn't go adding more to NUGT is the same reason we didn't add on USLV. We are seeing topping action. We flew higher on Friday. We did close up nearly 3% on the day, but we were much higher. We saw a rejection at the 62.73 level thereabouts, give or take a dime. And we were not able to close above this resistance level. And you saw the prior 2 days, a reversal day, an inside hollow-filled candlestick on Thursday of last week. So we are looking for a pullback. And I've already gone over with members. I posted the week ahead commentary in the members area. Members, if you're watching, it's already posted there. Go check it out. Our strategy for NUGT, USLV, and plus the plethora of other names I'm going to go over in a moment. So, folks, I would encourage you, please, if you're not currently a member, that's fine. I don't want to see anybody losing money. I believe that we are going to get a pullback on gold and silver and the miners. Allow for that pullback. Wait for the setup, and then begin accumulating your position or opening your position, not on Monday. Allow for the pullback. It's coming. So this is not me speaking my book. All right, let's go over to the charts that we're watching for the coming week. We'll begin with AMC. This is an extreme oversold stock with RSI at 16.23. We saw a bearish key reversal on Friday. I believe that we are going lower this week, but we will be stepping in at historical support. I've already discussed where that historical support is with members on the week ahead commentary. And we will be looking for a short covering rally on AMC. And these are going to be singles and doubles, folks. These are highly consistent, profitable trades, extreme trades that are simply unsustainable with RSI down in the teens. But the key is to buy at historical support levels and to accumulate a position. If you go jumping in with both feet, you're going to be disappointed with the results longer term. You must average down your position. And I know that the prevailing wisdom out there is that you should never average down. And by and large, that is a true statement. However, when that is not true is when you have a stock which is being thrown out like a baby with the bathwater and is at historical support level with RSI at extreme oversold levels, meaning RSI down below 17, perhaps even single digits. And that's what we like to do. Accumulate a position in anticipation of a short covering rally. So AMC looking good into the coming week. ANF, Abercrombie & Fitch, RSI is at 14.30. It's very, very close to a buy signal for us. But again, we are displaying discipline by waiting till the shares hit historical support. And you need to take a look at your weekly and monthly charts to identify where there is historical support below. And that support may have acted at one point in time as resistance, and that's great to see. But as it stands right now, the path of least resistance for Abercrombie & Fitch is to the downside. Now, tomorrow morning, we may see a pop higher in this market because the tariffs on Mexico, those will not transpire. In all probability, the futures will spike higher tonight and into tomorrow, and perhaps that'll provide some relief for ANF, and we will not chase the shares. We will only buy at historical support. The next chart up, Cloudera, CLDR, RSI 14.21. Stokes is still rolling over here, so I do believe that we'll probably head lower. The only fly in the ointment on that statement is that we are leaning into the third standard deviation Bollinger Band. Perhaps we'll trade sideways and then resume the downward move. But I do believe that we would all probability are going lower here, despite the fact that we have RSI at 14.21. The RSI is not the end-all and be-all of extreme trading, meaning the RSI just serves as a tool to help qualify the shares to be a watchstock. The key is the price action at historical support. So Cloudera is interesting moving into the coming week. We are not ready to pull the trigger yet. Look at this volume. Big distribution here. You can't fight these guys. So sit back, watch, and wait, and let the shares come to your price target. SCOR. We've talked about SCOR in the past. This is a stock that simply just can't get out of its own way. But I think that this extreme oversold condition is going to be resolved very, very soon. We have RSI below 10. And this is what I always like to point out. People don't believe that RSI can go down below 10. It can. If you're using that rule of thumb of RSI below 30 is oversold, you would have lost a ton of money had you bought these shares when the RSI dipped down below 30. That was back here, March the 29th, and right before the gap down. So you would have lost a bucket load of money. You probably would be out of it licking your wounds right now. So profits come to those with patience, and these shares are like a coiled spring right now. Look at these stokes, like a coiled spring. Volume was very good on Friday, so it looks as though you're already seeing some stealth accumulation of the shares. ADX on a daily basis is above 65, unsustainable. Our last extreme trade, then we have a couple of momentum plays to go into. Kirkland, RSI at 16.32. I do believe we are heading lower here. Big volume. Again, you can't fight these volume bars, right? If you try to step in and you try to fight these guys, you are going to lose. They will steamroll you. Let those volume bars drop down to below average. We are leaning into the third standard deviation Bollinger Band. Perhaps we'll get a 1 or 2 day reprieve, and then we'll see a resumption of the selling down to historical support. Again, members, I've gone over the historical support levels on the week ahead commentary. They are posted in the members area. Now moving on to emerging markets. This is the EDC on a weekly basis. Let's go to a daily basis. I want to buy the emerging markets because I believe that the dollar is probably done with its rally. You saw a breakdown on the U.S. dollar last week. And why am I talking about the U.S. dollar relative to emerging markets? It's because when the U.S. dollar declines, it's like a tax cut for emerging markets, and they benefit. And as you can see here with the EDC, we had a very good week last week, yet you're seeing topping action here. Much as what we saw in NUGT and USLV, what we need to see on the EDC is a pullback and a higher low get put in. Right now, we've just had a parabolic move higher off of an oversold condition. This is not conducive to the type of trading that I like to do. I want to see a good setup, a good foundation build. And I think that we're going to get that in the coming week and weeks on EDC. So again, it comes down to patience. It comes down to stalking your prey. They're probably going to rally these markets. You're going to see tech rally. A lot of money is going to flow into those names, the Googles, Amazons, Netflix, all the ridiculous IPOs that we have out there now. And you'll see the EDC, you'll see silver, you see gold. Those shares will pull back, ideally in an orderly manner. They'll set up for a nice continuation move higher, and we will be backing up the truck and building core positions. The next chart up, DPZ. This is a continuation breakout trade. I'm loving DPZ due to the fact that it's been consolidating. It appears as though, in all probability, we are going to break out. It has shown relative strength versus the S&P 500. We have a multi-month, a multi-year consolidation, I should say. I think that we are breaking out, and we are breaking out very, very soon. Members, we will be sending out trade alerts when we do execute on any of our trades, either on the buy or on the sell. Lululemon, another name, bull flagging out on a weekly basis. We're looking for a breakout here. Loving the setup on Lululemon. Stokes are putting in higher lows. Very nice setup. Cal-Maine Foods. This is one where we stopped out of a while ago, and thank goodness that we did. We stopped out up in the mid-40s, and the shares just plunged down into the mid-30s. This is a very volatile stock. You may look at the statistics and the business profile on Yahoo Finance and say, wow, it's an egg company. Big deal. It's an extremely volatile egg company. They had disappointing earnings, which caused the pullback, and it looks as though we have found support at historical support. We'll be using the daily chart to identify if and when we do want to get long of Cal-Maine Foods. I would strongly suggest no market orders, please. It's very volatile, very thinly traded. It only traded 2 million shares last week. You want to use limit orders only. And that is it for this week, folks. If you're not currently a member, sign up for our 14-day free trial offer. If you're not ready, that's cool. Just simply click that follow button on YouTube, click the notification bell, and you'll get notified whenever I put out any of my videos. I do have a free tutorial on candlestick charting. If you go to the website, thecontrariantrader.com, you can opt in and you will get that 5-part video series. Everybody enjoy the remainder of your weekend and have a profitable trading week. Be well.